Welcome back. You're tuned into Bazaar Morning Call, and let's get straight to some fundamental analysis. Dipan Mehta, Director, Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Hope you got enough sleep last night. President Trump was, shooting out the tariffs, and a lot of investors were a little bit jittery. But now at least that uncertainty is partly out of the way. So let's focus on the markets and let's focus on stocks as well. Dipan, today for starters, the pharma stocks could start off in the green. And late in trade yesterday, you did see a surge actually. So that told you that the pharma index itself, had a bit of a sniff that maybe nothing is coming for them, nothing negative, at least as of now. Your view on the pharma stocks, and do you think that they'll get away, or do you think that given the uncertainty, you'd rather stay away?
Good morning, Nigel, and thank you for having me on your show. I slept through the entire announcement. You can always catch up in the morning. But I think it's a great sense of relief for the pharma sector. And I think pharma stocks again will come back into the reckoning. I don't think that having announced this kind of an elaborate tariff policy in place, that they should start tinkering with it very soon. So I think pharma has a clear run for the next several quarters or so. And clearly, I think the Trump administration recognized the fact that pharma provides a very important, it's a very important import for US, considering that it keeps the healthcare costs lower. So from that point of view, I think it's very positive. I would focus on some of the CDMO players, I think, where the prospects look really good, although they are trading at expensive valuations. But I think growth rates will be higher over there because they have an advantage against Chinese when it comes to this particular activity within the pharma space. But on the whole, my first reading is that it may create opportunities as well. And we'll have to go company by company to understand how these tariffs are playing out for them. And there could be a few surprise winners as well. Could be even textiles, who knows. So I think this entire earnings season will be quizzing all the managements on what they make out of this Trump policy.
Dipan, I mean, absolutely take your point on pharma, etc. And a great space. Numbers for the fourth quarter should be pretty solid, etc. as well. I just want to make it's just one caveat. The executive order excludes reciprocal tariff goods that are subject to or that will become subject to sectoral tariffs through Section 232, which is their National Security Act. And this includes pharma. So the only thing is that sector level tariffs may still yet come. They not come as part of this. It was not on the agenda last night. So that is the only caveat. But I mean, I take your point in that sense. Maybe a bit of a relief at the margin. But otherwise, I mean, it's not great news at all, right, Dipan? For world markets, for at least in the near term, economies, trade, a fair bit of disruption and turmoil in that sense, beyond what happens today.
Prashant, I see this as an opportunity. And if you go back into our 20-30-year history, whenever there is turmoil in global markets, and if you buy Indian stocks in 2-3 years down the line, you get exceptionally good returns. And in a way, a lot of Indian companies that we are investing in are completely insulated from all these global trade. When we look at the banking sector, infrastructure, cement, retail, entertainment, hospitality, I think they are not affected by what Mr. Trump says. And investors are focusing on those sectors. So if you consider the entire listed space, apart from pharma, IT, textiles, specialty chemicals, there are a lot of sectors where investors can have there's no certain uncertainty around these Trump tariffs. And such events, they provide a good entry opportunity. So if you're sitting on cash, you've not taken advantage of this recent rally which has come through, then this is a great time to invest. And I think investors should consider the history. Whenever there's turmoil and you have bought, you've always made a very good return.
So far, there is going to be turmoil in trade. Is there turmoil in stock prices? Maybe not yet, right? You would agree, starting points matter. I mean, it's not as if they're not wildly off in that sense. It's not like one of those big global financial crises which have brought prices sharply down. But anyway, Dipan, what is on your mind? 2-3 ideas which really, to your mind, stay insulated from all this.
I think that NBFCs are looking very interesting to me. With usual disclosure, I think stocks like Bajaj Finance, L&T Finance, even beaten down stocks like IIFL Finance. So within the banking space, I think there could be several triggers for NBFCs, starting with interest rate cuts. And we have this lower risk weightage, so that's looking good. After a long time, I think retail also looks quite interesting. Specialty retail companies, the likes of Campus Activewear, Metro Brands, Go Fashions, Ethos, I think all of these companies have had pretty soft quarters. Even tier two retailers like V-Mart, we saw what numbers they declared in terms of their same-store sales and overall sales, very impressive. V2 retail, I think. So that looks quite interesting to me. And like that, I think many ideas are there. We spoke about cement also, ACC Ambuja, I think may have a good run. And after a long time, we are seeing a lot of flow of orders to the infrastructure builders and to the defense sector. So I think it's business as usual over here. And although I agree that stocks are not really at throwaway valuations, but you may not expect multi-bagger returns, but at least you can expect returns which are typically historically what we have got historically in the Sensex and Nifty, which are around 12 to 14% or so.
From the companies that have won orders, which any particular names you like? Very quickly, Dipan.
Hindustan Aeronautics, I think, very good visibility over there.
Let me ask you about this pharma surge. Right now, it's, you buy everything on a morning like this, right? It's a quick trade. But if you were to kind of stick your neck out and be a little picky and choosy from a portfolio standpoint on pharma stocks, then would you stay with large, generic players which have US presence, whether it's a Sun Pharma, whether it's Reddy's, etc.? Would you go with CDMO players? What would the more nuanced approach to pharma be for you?
So I think, again, Sun Pharma comes back as a part of your core holdings. And with this uncertainty, rested for the moment, I think Sun Pharma's strategy for the US markets and rest of the globe is very innovative, different, and will yield rich results going forward also. And looking at some CDMO players as well, I think, but they're very expensive. So waiting for correction, stocks like Suven Pharma, Divi's Laboratories, and even OneSource, I think, pretty interesting. There's this Blue Jet Pharma also, which is quite an interesting company. So I think that within the pharma also, eventually investors will try and get a bit selective and go for companies which have a superior business model.
All right. Any quick take on some of these EMS companies, Dipan? If the tariffs are higher on Chinese imports, maybe that throws up a bit of an opportunity. Some of them have seen a sharp correction as well. You think so? Or you want to stay away, given the high multiples that they've given the low margins as well out there, and given the run-up that we've seen in the last few years?
See, I think there's an opportunity, and as I said earlier, that as the dust settles down, it may make sense for some of the Chinese players or other international multinational companies to start operating or sourcing from India as well for the US market. So let's just wait and watch. Nothing specific comes to mind as far as EMS is concerned. But yes, I think I was quite impressed with Syrmia SGS's numbers, and the management commentary also is quite positive. The stock has corrected significantly, and now at least trading at valuations which kind of makes sense if it can grow at that 25-30% type of clip for the next few quarters or so.
No, got that. Dipan, thank you very much for joining us. Good conversation, and I hope we speak again soon as we navigate through the day. But let's welcome in our next guest, right? Sharp increase in oil imports from the US. Prabal Sen is energy analyst at ICICI Securities. He's with us now. Prabal, good to have you with us here. It's the start of what is going to be a long and tough day. What did you make of it? Any implications for your sector with these tariffs last night?
I think the language suggests that energy, so far at least, has been kept out of the ambit of the tariffs. I still don't know if the 10% flat tariff that has been talked about, in addition to the reciprocal tariffs, we are trying to get a view from the companies whether the petroleum fuel exports to the US will be impacted by this 10% tariff. But at least the higher reciprocal tariff don't seem to be applicable to the energy segment as of now.
Okay, no, absolutely. It is not applicable. But any other roundabout implications from a stock perspective, not business-wise, Prabal?
Well, I think, frankly, more experienced people will be better at commenting on the overall impact that will be there on valuations and multiples across the board. I don't think this is something that anybody has been prepared for. Obviously, you have been expecting that this tariff order will come, but an impact on the broader market will obviously change every sector, not just mine. The benefit or the small positive, if I can eke out, is that multiples for our sector, specifically the oil and gas sector, are not really anywhere near, premium multiples across the board. So to that extent, the possibility of a further derating or a structural derating is relatively less. The second aspect is that peculiarly enough, the concerns around global economic growth can have an impact on slightly lower energy prices. And India being a price taker and a major importer of crude oil and other gas inputs, there I think the margin improvement can actually help, offset any impact on volumes or growth that may happen with disruption in export volumes or any other spillover impact that one might see. So I would say that impact definitely will be there, but as of this moment, I think the oil and gas sector is the least of our worries from a broader market.
Absolutely. You said it, Prabal. Now, I'm just actually looking at, just allow me 1 second. I'm looking at the first pre-open rates that have come through. So 182 points down on the Nifty. It's pharma all the way. All your pharma stocks are pushing higher. Divi's 4%, Dr. Reddy's 3.5%, Lupin 4.5%, Aurobindo 6.5%, 7%. Gland Pharma, Glenmark, you name it. Gland is up about 12%. So mid cap, small cap, large cap, all pharma. Generics players, CDMO players, all kinds of pharma stocks are ripping higher this morning on this relief. At least they've been spared for the time being. And we'll talk about pharma as we go forward in just a bit. But probably just my quick question. I mean, as the market goes through this turmoil, it will require all the help that it can get. So from that standpoint, I don't know if Reliance can do its thing. At least on the oil and gas business side, do you see any positives up ahead as we're going to be looking at the fourth quarter numbers and looking forward? I mean, overall GRMs, given what's happening in the oil and gas markets. So can we expect any help from RIL?
I think for RIL, I think the performance of the OTC business.
I think we've just lost that line with the Prabal. We'll try reconnecting. But it is really pharma along the way. Dipan,